Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry. Today is Thursday, April 27. The time is around 2 a.m. GMT. So today we are looking at the chart of the AUDJPY 60 minutes chart here. So we can see we ended with B here in the intermediate degree. So that means we are now within the wave C leg down. And within the C leg, it subdivides into 5 waves. We ended with one in the minor degree at the low here, and then now looking for the wave to rally, followed by for the downside. Now, over here, there is no clear sequence whether it is bullish or bearish because the arrow is neither red nor green. It is black turning down, and we're going to explain why that is the case. But we're also going to take a look at the larger degree to get an idea if there is any clarity in the larger degree time frame. Okay, but for now, simply when we look at the 1 hour time frame, the bias is on the downside because of the arrow. Even though again there is no sequence, if it is red, it is red and down, that will be a better and more sort of more clarity that the sequence is bearish. But now this is not really confirmed. There is no sequence, but the bias is on the downside. Okay, now let's zoom out to get a better idea of the AUDJPY. If we look at the daily time frame, and we started from this peak here in September last year, now we can see clearly there is a 5 swing. All right, 5 swing is a bearish sequence, guys, right? So you can label this as a 1, 2, 3, 4, 5, for example, diagonal, and that's one way to do it. Another way to do it is a 5 swing in a 7 swing structure, right? 7 swing structure is a WXY, which looks like this. So it's a double zigzag. Basically, you got 1, 2, 3. So that will be your W here, right? And then you got a X rally, and then you should be getting another 3 down. So that is a 7 swing. So 1, 2, 3, 4, 5, 6, 7. So this is 1, 2, 3, 4, 5, and this potentially could be your 6 here. All right, and that will be your B here that you see in the 1 hour time frame. So if I put down this B here, so let's say that's the A, right? If that's the B, so basically what this is saying here is that this is a series of an ABC, a double zigzag, right? A series of an ABC and another ABC here. All right, so that's exactly what we are looking at here. So this is your ABC over here, which forms your W, and then this is your X in the larger degree, and then another series of ABC. Now, for this view to be valid, and that's why we are only black turning down, we still need to break below the A, because unless it breaks below the A, we can actually still do another what we call a bigger 7 swing from the lows like this, right? We can still do something like this and continues to go down again after that. But couple of things first here is the idea that the rally from the lows is only 3 swing. That is giving you a lot of clues. This is a clear 3 swings here that gives you an idea that this is actually still expected to go down eventually, whether we will go down now or whether we will do another bigger correction first before going down. But the fact that this is not an impulse from the lows, this is telling you the bias is still to the downside eventually, right? So eventually this low is gonna be taken out, whether we should be going down from now while holding the B, or whether we are going to go higher first, doing a bigger rally before it goes down. But this is gonna be taken out first before it takes out this. This is what the structure here is saying here. At least the rally is only 3 waves. So for now, we are calling the more aggressive view, calling this 3 rally and this B. So for now, as long as we stay below this B, the rally, the short-term rally, expected to fail, and the pair can continue to go down again. Okay, so that's the update here. And if you want to get more updates on the Forex, indices, commodities, feel free to check our service. We have 14 days trial, and the link is in the description of the video. So see you all again next time, and have a nice day, everyone.